Hello, I'm Mortgage Mike, and welcome to another edition of your weekly mortgage industry update. Today's topic is on the mortgage process. I want to relate a story to you, though, so that we can all put this into context. The other day, I've been working with a client, and I sent them an email, with a pretty extensive email, with a laundry list of the items that I would need, in addition to the items that they had already provided to get a mortgage. Now, it took a couple of hours for this client to call me back, but they called me back and they said, you know what, Mike, I have never, ever had to provide this much documentation on a loan that I've ever gotten, and I have to believe that you're probably the only mortgage company out there that's asking for it. I thought, really? And then I began to think about, when was the last time this person probably purchased a home? Well, it was probably about 4 years ago, based on their credit report. And I could realize at that moment that the world that we were living in 4 years ago is not the mortgage world we're living in today. So is the mortgage process personal? You are right, it is. And you know what? It's too bad. I hate to say it, but it's part of the process nowadays. Because of the collapse of the financial industry a couple of years ago, and prior to that, with us just giving them away without documenting anything, now we have to document everything. So I want to go over the 3 C's with you, because this is what we look at in the mortgage world. The first C is collateral. Now, collateral is the property itself, it's the appraisal, and there's not a lot we can do there, and that's not too personal. However, there's 2 other C's, and that's capacity and credit, that we have to look at, and that's where we can get very personal with our clients. And in fact, I liken it to getting in financial bed with our clients, because I'm going to get to know everything about this person. There's no lies they can hold back from me, that I will uncover everything that has happened in their financial life, and not only that, I'm going to want the documentation to support it. So let's start with credit. Credit is more than just your credit score. Credit has a lot to do with the story that we have to tell. First off, we look at inquiries. Any credit inquiries that are on a credit report, we need a letter of explanation around what those credit inquiries were for. And if you obtain new credit, we're going to have to add that credit to your credit report. Secondly, we begin to look at all of the debts on that credit report, making sure that they match up to what they've told us that they have. Thirdly, we're looking for judgments. We're looking for collections, you name it. We are looking for things in that credit report. And not only that, we have another report that comes along with our credit report that's even a dive deeper into our client's profile from a credit perspective, or at least from an information perspective, where we begin to verify their address and making sure that their address on file is the address that we use, that their social security number doesn't have a mismatch in the system. There's a whole litany of things that we have to go through to verify that the people that we are doing business with are who they are, and that their credit is what they say their credit is, and that there's no untold or hidden liabilities out there. So we go really deep on credit. Now, the second C is capacity. It's the willingness of the client's ability to pay a mortgage back. And when we begin to look at that, or not the willingness, their ability to pay. When we look at that, we begin to look at income. We're looking at paycheck stubs. We're looking at W-2s, tax returns. God forbid we get a self-employed borrower, because the next thing you know, we are going pretty knee deep into their financial situations. And in many times, we're asking for corporate returns. We want K-1s. And if things don't add up, we need to know the story. Again, God forbid we have declining income. We have declining income year over year. We had a spike in income from one year. We've got to figure out, how do we tell the story and how do we document around this thing? And that means that I'm asking for a tremendous amount of paperwork from our clients up front and through the process. Secondly, when we begin to look at bank statements and assets and where the money is coming from closing, there is not a deposit that we don't scrutinize if it's not if it's a non-payroll deposit. If it's a non-payroll deposit for $100, we want a copy of the check. We want a letter of explanation for what it is. We are looking for everything that we possibly can in a file that may represent fraud, may cause a quote-unquote buyback from our investors. So every one of us in the mortgage industry is forced at this time to document all aspects of a file, and any questions that arise have to be addressed. So when I send out an email and it's a laundry list of information that I need, what I'm trying to do is get all the information I can possibly foresee being a problem done up front, and not at underwriting. Because the last thing we want to have happen is to get a file put together and then have surprises at underwriting, or last minute surprises at closing. So is the mortgage process getting way too personal? Hell yes it is. And you know what? we can't do anything about it, and neither can our clients, other than just sit back, trust that your loan officer is the guide to the process, and provide the information that's being asked for. So I'm Mortgage Mike saying thanks for watching. Spread the love, heal the world.